back. It looks like we are we live? Yes, it looks like we're live. All right, welcome back, folks. If you haven't been living in a cave somewhere, then by now you'll know that we got pretty significant vol crush coming from positive news about the China deal a couple days ago. And we also have expiration in the December VIX future tomorrow. And so I wanted to come on and talk about expiration for a second. Some people get confused a little bit about this, and it can be confusing because there are a lot of different products out there. But and the ones that I tend to focus on are VXX and UVXY, but there are which are composed. UVXY, VXX, SVXY are composed of the VIX futures, and what happens is that their formula requires that the futures represent a specific time period out in time. So 30 days out in time is that time period. So when you've got futures that have an expiration date, it's a little tricky because if you have a future that expires in December, then it's only going to be 30 days out for one day. And then the next day it's going to be 29 days out, 28 days out, etc. When you've got stuff that expires in time. So the way that they deal with that is you have just one future when it's 30 days out, and then when the next day happens and that next future is 29 days out, you add a little bit of the next future out in time. So if you've got a little bit of these futures that are 60 or 59 days out and a little bit of the futures that are 29 days out, you can average them together to get stuff that expires in 30 days by combining a mix of two futures. And that's what we do for these products. So as a result of that, as time goes by, coming towards expiration, although these products started the month with the December future being representing the entire products. 30 days ago, VXX or UVXY was entirely based on the December future. But as time has gone by, it slowly switches from being represented by the December future to being represented by the January future. Until today, it's only 1/30th still the December future. And so the December future is only affecting the price of UVXY or VXX. It's only 1/30th of the it's only contributing 1/30th of what happened. So if the December future goes down a full point and the Jan future doesn't move, UVXY or VXX are hardly going to move. So basically, if you were to look at the price of the January future, the movement of that January future is going to determine the movement of VXX or UVXY or SVXY. It doesn't really matter what the December future does at this point because it's rolling off. So that's why we call it moot. And I guess maybe there was even some confusion over the word moot. For non-English speakers, moot means it doesn't matter. So for example, if you're trying to log into my account and someone says, well, I have the password for another account, you're going to say, well, that's moot because it doesn't matter. So you'll hear us VIX junkies talking about what happens on expiration tomorrow, but if you're trading UVXY or VXX or SVXY, you don't really have to tune in that much because what happens to the future on the day of expiration, it doesn't really matter to UVXY or VXX. It does matter if you're trading options on the VIX futures, and it does matter to us who are following this stuff, mostly because there's been a history of really bizarre moves the day of expiration in the VIX futures. And that is kind of attributed to, or people, there have been allegations that people try to manipulate the closing price of these futures to make money. And So let's look at the VIX here for a second. And yeah, the VIX price moves around a lot on expiration sometimes, and the VIX, the future that's going to expire can move around a lot right on expiration and do some really funky stuff. And we had a couple examples of that last year, which were, hey, what's up, Greg Gossett? Which were pretty troubling, where the futures moved around a lot right on expiration. And so the way you can manipulate that is if you had a position in the options in either the VIX futures, options on the VIX futures that were about to expire, or if you were trading the specific options in the SPX, you could take advantage of that movement at the last minute to make money by placing big bets just for that day in the futures or in the options. And to refresh your memory, the formula for the VIX is based on a strip of calls and puts in the SPX. And a strip meaning they pick certain strikes to sample or to check the price of, and they use those in the equation. So if you know which strikes it is, and you manipulate those strikes. So how would you manipulate a strike? Well, you might put a bid in for one put, which, if there's a market that's no bid at 50 cents and you put a bid in for one put, you say, 20 cents bid for one put, then all of a sudden the midpoint of the market goes from 25 cents to, like 30 cents or something, and or 35 cents, and it will change the calculation. So some of these strikes that are sampled for the VIX calculation can be very illiquid. It can be stuff that like no volume has traded in 3 weeks or something. And so it's susceptible to what we call marking, which is faking the prices just to change the VIX calculation for a few minutes to manipulate the market. And those of us who have worked as market makers will be familiar with the term marking. This happens a lot of times. Like, for example, let's say I was a trader, a market maker, and I had a big position in Apple calls. Let's say the December 210 calls, I own 500 of them. And, if the end of the quarter is tomorrow and my bonus is based on how much money is in my account, then if I put a bid in for these calls right on the close of the day, then maybe the closing price on this call ends up being $1.55 when it would have been $1.40. And I own 500 of these calls, and thus my bonus goes up by a couple grand. Well, that happens all the time. And not only do people try to mark stuff up so that they'll make more money, like let's say my bonus is based on where it marks, people will try to mark stuff down so they don't have to pay as much taxes on it. So the last day of the year, sometimes people come in. If you're a hedge fund, you've got a big position in some strike, they might come in and try to mark stuff down so that just for that one day when they check it, all of a sudden you don't have as much money as you really do, and you don't have to pay as much taxes on it. So marking is a thing that's been around forever. And they go as far as to certainly when I was working as a market maker, sometimes like if it was my bonus, if they knew my bonus was going to be based on the end of the day trading, I would actually just leave the pit before the end of the day, just so that there was nobody can accuse you of marking stuff if you weren't there. But anyways, so but the point that you should be taking away from all of this, I get distracted, is that on expiration, if you're trading UVXY or VXX, it doesn't really matter what happens to the December future or the expiring future, because UVXY or VXX aren't based on that anymore. They're based on whatever the next month is out. And in that similar vein of thinking, when we're looking at contango, it certainly does matter as far as rebalancing and whatnot. contango matters right up until expiration as far as these products decaying. However, we are always looking forward to the next month to see what the contango will be after that. So if I pull up this chart of VIX Central here, and let me just check on my screen here to see that I'm out of the way here. If I pull up the chart of VIX Central and get out of the way, you're going to see that contango is listed on the bottom of the screen, and you see there's a 1. It says this is the front month contango between month 1 and 2. And contango is basically just the percentage difference between these two prices in the future. So if I were to take 1490 in January and I were to subtract 1225 from 1490, so that would be 265, and then I were to divide that by the price of the first future, I would get that contango percentage of 21%. And thus, if we were to pull up UVXY on the ProShares website, we would see, it shows here, right now, there are 2,300, or this is a day ago, but essentially right now, they own 2,300 of these December futures, and they own 41,000 of the January futures. So at some point today, they're going to sell out all of these December futures, and they're going to buy, they're going to take the money and they're going to buy Jan futures with that money. And if you look here, they're going to sell out these futures and they're going to buy these Jan futures. Now, the pricing of this, a lot goes around this index, but there is the reality of the fact that they are going to sell out one future and buy another. And so these prices are important because you're moving away as you change what your fund is based on from right now. You can see the December future is right next to spot, and we're going to take those futures that were right next to spot and we're going to replace them with futures that are way farther away from spot, which is going to give us an opportunity for those futures that we bought that are farther away from spot to fall towards spot. The futures right now that are D's, they don't have any opportunity to fall anywhere because they're already right at the spot price. But if we replace them with Jan futures, then those futures are going to have the opportunity to fall towards spot. And thus, this is going to give us opportunity for this to decay further as we rebalance out. So that is why this contango number does matter right up until expiration. However, we are always looking forward in time. So during expiration week, everybody is going to be looking at this second relationship here between the M2 and M3 future, or between the Jan and Feb future in this case, which is the second month contango, which is right around 11% today. And that's a pretty high number coming into expiration. People were kind of squabbling over this. I have these funny earphones on. I'm taking these off. People were kind of debating over what the average contango in the second month is on expiration week on Twitter this morning, and the range was from 4% to 8%, or 4% to 6% being the average. But either way, this is a pretty high number for contango to be starting out right after expiration. And generally, we should see this curve, if things kind of just stay kind of like they've been doing lately, we should see this curve curl down lower than it is now, and we should see contango between the January and Feb, which will be month 1 and 2, starting the day tomorrow. We should see these Jan futures curl down lower towards spot, or at least the relationship between these futures steepen. So I'm going to get out my little pen here, and I'm going to show you what I mean with my little pen here. So we should see this area here steepen. It looks steep the way it is now, but we should see it steepen more right after expiration. Or I'm sorry, I'm doing this wrong. Erase that. It's actually going to be this relationship here between Jan and Feb. We should see that start to steepen right after expiration. And And if you think about it, if you were making markets only in the futures and you knew that these guys had these funds and every day they're going to come in and they're going to try to sell you this Jan future and they're going to try to buy the Feb one from you, then every day you've got to buy more of these Jans, which you already own, and you've got to sell more Feb, then you would steepen the relationship too. You try to make it as steep as possible because you don't want to buy more Jans and you don't want to sell more Febs. So the more these funds have that they need to rebalance, the steeper this curve goes. All right, I want to address now really quickly. There's been a lot of questions about, and this is like a little bit of, it comes in the lines of a little bit of fear mongering on the case of newspapers and reporters. But people are asking, well, what if there's no buyer? What if like we wake up one day and nobody wants to buy volatility, and they've run out of buyers? Or I'm sorry, I'm saying that backwards again. If we come in and nobody wants to sell VIX stuff anymore, like we've all sold too much vol, and buyers come in and there's nobody else to sell this stuff. Is this whole system just going to fall apart? And the answer is, well, no, of course the system's not going to fall apart. If we've got buyers, then the price is going to move up until their sellers come in. And this is the way pricing works everywhere. It's called price discovery. And people don't think of things in the most basic terms sometimes. Price discovery is moving the price until you connect buyers and sellers. So if there's nobody that wants to sell volatility and there's buyers, then the volatility products and the VIX are going to move higher. It's not like all of a sudden one day the system's just going to fall apart. No, if there's not enough sellers, then it's going to move higher. The worry that we're going to run out of sellers because there's too many sellers doesn't really make sense to me. I guess people are worrying, well, what happens if there's so many sellers that nobody's willing to buy this stuff? Well, the reverse is going to happen. It's going to move lower. Right now, we're kind of in a mid-range in volatility. So I don't understand why people would be worried about there not being enough buyers if we're in a mid-range. If we were at the all-time low in volatility, if the VIX is scraping the bottom at the, 859 was the low in the VIX. If we were scraping the bottom of 859 in the VIX, then I can understand people being like, wow, nobody wants to buy volatility. This is kind of a frightening situation. But I really don't think we're there yet. I really think that people underestimate, even though in our own little bubble world here, generally it's thought that it's not a wise idea to buy UVXY and hold on to it, or to buy VXX and hold on to it. That's only in our little bubble here. In the rest of the world, people buy VXX and UVXY all the time to hedge positions, to make bets on a pop in volatility, and there's plenty of buyers out there. If there weren't buyers of UVXY, then you wouldn't see all these futures being in the model we have here behind me. If there was no buyers of UVXY, there was only sellers, you wouldn't see a notional value of $620 million with $447 million on the sideline invested in this fund. And it's funny to me even to call it an investment, or to use that word invested in. So let's change that. There wouldn't be people putting money in this fund because it certainly is not an investment. But obviously these big numbers, 620 million, 447 million, means that there are a lot of people out there that did buy these things. So put your fears to rest that there's nobody out there to buy VXX or UVXY. There certainly are people out there buying it every day. We had a very unique system for the Volmageddon, and I'm not saying at all that a Volmageddon or a big vol spike cannot happen again. But the Volmageddon, the most of it happened after the close, when there was a small window where they had to buy these futures after the close when there's not that much liquidity, and the price skyrocketed on the futures at that brief moment. So it was a kind of a quirky, weird thing. Yes, there was a spike in volatility that day, but most of what happened that really took XIV and ended up eventually ending XIV happened after the close. And go back and look. I had Vance Harwood on that day, and we were talking about it in real time that day. Go back and look at that. Not to say that there can't be another spike, and not to say that there isn't going to be another spike, because there will be another vol spike, and it's coming up, folks. We don't know when it is, but it's coming up. Okay, let's switch gears for a second. I did not want to come on yesterday because I did not want to. Traders are superstitious. I don't talk about that much. We try to keep everything like scientific and everything here, but traders are superstitious. A lot of people won't. When we used to actually use pens to write on trading tickets, a lot of people would not write with a red pen. And VXX immediately goes down about 10 cents after the close of the markets. What's going on with this? I think that, Greg, I think it's probably coincidental that you saw that happen in several days in a row, because that doesn't always happen. I think that's probably coincidental. It does obviously trade VIX. The VIX products and futures stop trading sometime after 4:15 every day, not necessarily at 4:15. There's a closing rotation around 4:15, but stuff moves around after the close, and it can be up. A lot of times it is up, sometimes it is down. What you will certainly notice is what we have called weekend effect, which is that the formula for the VIX is kind of calibrated in like a there's a little bit of a tracking error over the weekend. There's 7 days in the week, there's only 5 trading days, and that kind of messes up the VIX a little bit, whereas you will see the VIX price is going to be a little bit lower on Friday afternoons than it quote-unquote should be, and it's going to be a little bit higher on Monday mornings than it quote-unquote should be. So you'll see a lot of Monday mornings when the market is unchanged, but the VIX is up, or the market is even up a little bit, but the VIX is up. You'll also see on Fridays, you'll be like, wow, the market's unchanged, but the VIX has moved lower than I would think it should be. Something's really happening here, you'd think, but that is... and that's due to this weekend effect type tracking error type thing with the VIX. But as far as VXX being down after the close every day, I haven't, I would suspect that that's sort of coincidental. I will look at it though over the next couple of days, but I don't have an explanation specifically for that, which you're noticing over the last couple of days. But we can track it over a little period of time. All right, so back to the superstition. A lot of traders, and this isn't just small people, large hedge fund managers will not tell you what positions they have on until they've taken their risk off. I'm in a kind of unique situation because I'm showing you my positions and I'm showing you my P&L as it's happening. However, there is a little bit of superstition as to certainly... I don't think people should brag about making money, because that makes the trading gods mad, and it can backfire in your face. I'm a little bit wary, because my positions have been doing well, of talking about it a lot online, because I just kind of want to let it do well and talk about it when I take it off. So I haven't really been sharing my position lately, but safe to say it's been working out well. I guess that one question is are we in some sort of holding pattern now until after the holidays? And what happens when you're trading on a holiday day? And certainly over the Christmas period, there's going to be some partial days, and there's days leading into holidays when not many people are around. Now, these days can be slow, certainly, and the volatility areas kind of discount this stuff, and December is sometimes discounted volatility because there's so many holidays. However, vacation type days are also characterized by illiquidity. So if something were to happen, stuff can move a lot. So you want to be on your game on these days. You want to be aware of the fact that you're not going to, if you have big options positions or positions in illiquid products, you're not going to be able to do stuff for good prices on days when it's holiday stuff. Stuff can move around. So if you do have a situation where like you own a bunch of options and you need to try to scalp stock back and forth, then this can be an exciting time to trade. And like I said, if something does happen, like, I don't know, war is declared somewhere or something, during these periods, stuff can move a lot because there's not, if there's 10 guys who are on the bid and the offer, then stuff is going to move less than if there's only 2 guys there and, one guy is doing jello shots on the side of his office somewhere. Stuff's going to move a lot more if something were to happen because their liquidity isn't there. So stay on your game for the holidays. The other thing that I've noticed a lot with holidays kind of stuff is maybe stuff doesn't move during the holiday, but like that Monday and Tuesday after the holiday's over, all of a sudden stuff is rocking because people are thinking over the holiday, oh, I better make this change or whatnot. The other thing you want to be thinking about in the back of your mind is we're at the end of the year right now, and so people do stuff at the end of the year for tax reasons, for hedge fund guys are doing stuff for all kinds of reasons, which I don't even understand. But if a stock is down, has been down a lot over the year, has maybe underperformed some other stocks, people will sell that stock if they owned it because they want to take the loss. If you've got one stock that you made $10 in and one stock that you lost $10 in, then and you've already sold the one that you made $10 in, you might want to sell the one that you lost $10 in so that you don't have to pay taxes on the other one, and then you can just buy it back the next day or something. So stocks that are dogs, that are underperformers, look for them to be worse dogs the week before January 1st because there's going to be tax selling in these things. Now, the market does price in this in some cases, so you won't see it as extreme, but tax selling does occur, and the market can act kind of funky that last week of the year, so keep that in mind. Statistically speaking, I believe there's often is a Christmas rally, coming into Christmas week. I haven't gone back and looked at that, but be aware that kind of thing can happen. The short vol trade has worked out really well over the last couple months, and I hear these stories of people who are on the sidelines, and it's really unfortunate. It didn't happen to me this time, but it's happened to me before, where like I have this great trading idea to be short volatility, and I just don't happen to have the position on in one of the best periods. And I really fear that that's happened to some of VIX people here. I have seen a lot of people on the channel now who have been watching my theories, and all of a sudden, maybe my strategies weren't working out so well at some points in the middle of last year, and now all of a sudden, if you'd followed my strategies, you would have made a ton of money in the last couple of months. So all of a sudden, the channel is a little bit more popular. People are happier with me because people that have been following this stuff have been making money, and it makes me look good for a minute or two that the strategies have been working out. However, be aware that that's not, that all that is kind of silliness because stuff changes over time, and just because we had a good period here does not mean that this stuff is going to work all the time, and it does not mean there's not going to be a spike at some point soon. Somebody came on and asked me yesterday, they said, well, UVXY is down 5%. Would this be a good time for me to get short via whatever means, call spread, blah, blah, blah? And to which I replied, you don't want to chase after returns. It happens all the time. A great example of this is when everybody was into mutual funds. People would pull up on their screen, okay, well, which mutual fund did the best last year? and then they go out and buy that one. And, that can, in a way, turn into a self-fulfilling prophecy. If everyone in the world buys that one, then yes, it's going to do well. But you're chasing returns from last year. Another way of looking at that is that one went up 25% or 30% last year. It's probably at the top right now, and it probably isn't the best time to buy it. It can be frustrating when you see a stock makes a big move, and you're like, oh, darn, I wish I'd been on that move. And you want to go ahead and buy it right now, thinking, well, it's just going to keep moving like that because it moved. Tesla moved $25 yesterday, so I'm going to buy Tesla today, and it's going to, that kind of stuff. I would say to people, back up and look at things. If you can back yourself away from the situation, you can look at it in a more objective way. So back yourself up from volatility. UVXY, it's at the all-time lows. It went down again today. It went down yesterday. Do you really want to sell something at the all-time lows, or do you want to wait for an opportunity when we get a little bit of a pop? 10% pop in volatility, 25% pop happens pretty often. I'd say wait until you get the pop. Yeah, it's frustrating that the stuff is moving straight down and you might not have jumped on board, and you wish you'd been there on that down move, but jumping on now, you're going to feel pretty stupid if a month from now you look at the chart and it shows that you sold the absolute bottom. If I wait till there's a mini spike and I sell into the spike and it keeps spiking higher, at least, even if my position goes against me, at least I can look at it and say, well, it went against me, but I didn't sell the bottom. So wait for opportunities in the market. There's always going to be more opportunities in the market. They're always around the corner. The smartest traders in the world will tell you they didn't get every opportunity. They didn't get close to every opportunity. If you wait around for a little bit with your money on the side, stuff will come to you, and you will know this is a good trade. You will know that this is something you should be doing, and don't force it. Any suggestions for how to get a hold of old raw intraday data on volatility products, says Hubris. I would check out Six Figures Investing. He sells data. I'm going to type it in the Six Figure Investing. I might not be spelling it right, but just Google it. He sells data of all types, and if he doesn't have the data for you, he'll know where to get it better than me. That's Vance Harwood's site. So let's dig into the numbers here a little bit. Let's take a look at the VIX. We've said once again it is down. Let me erase these studies that I have here. The VIX is down. It does look like we're in the low end of the area, so let's just use our common sense here. It doesn't look like a great time to initiate a short position to me. If you have a short position on already, then maybe things are a little bit different. But it looks, if you could buy the VIX, which you can't do, it would look like a buy here. Now, there's no way to buy the VIX. If you buy the futures, they're in sharp contango. Now, one of the reasons, a lot of times when you're at a low point like this, the futures are in sharp contango. That is the reason they're in sharp contango, because they're leaving the back month futures up as high as possible because they know that this is going to come back up. The VIX is going to come back up from here. So if you buy these VIX products, they have a lot of decay in them. However, the lower the VIX goes, the more likely they are to make money and for these things to pop. So if you buy VXX or UVXY, there's a good chance that this stuff's going to pop. Now, that contango working against you, which is that's a long-term thing. It doesn't affect things very much in the next day, next 2 days, next 3 days, next week. But that's going to offset the likelihood that these things are going to pop. When you look at the VIX chart, it looks like we're at the bottom and this thing's ready to pop up. That's my assessment of the situation. So I would probably hold off shorting something. You don't want to sell stuff at the bottom. It's the basic rule of trading: buy low, sell high. And it looks like this is at. It looks like it. I mean, it certainly could break lower, right? If we move back to 2017, if I back this chart out a couple years, it looks a little bit less obvious, because here's the level we were at all of 2017, average probably like 10%. Right now we're 2 points higher than that. And we certainly could break back down into that area. There's no reason why we couldn't, and we probably should be in that area because of the fact that we're at the all-time highs again in the market. And I think the fact that we aren't down at this area is evidence to the fact that people are not selling volatility with abandon. There's people out there buying this stuff, people out there who think that there's going to be a spike right around the corner, people out there who are looking forward to the election and thinking there's going to be volatility coming into the election. There is a reverse correlation between the VIX. The question is it correct to say there's a reverse correlation between the VIX index and its future? I would not say that. I would say that the future is technically supposed to kind of follow the VIX, so there should be a regular correlation somewhat between the VIX and the VIX future. I would say that there is a reverse correlation between maybe the level of the VIX index and how much contango is out there. So when you've got the VIX a little higher up, contango levels are probably lower. When you've got the VIX lower, contango levels are probably higher. So I would say there's more of a reverse correlation between the VIX, the level of the VIX index, and contango level than the correlation between the VIX index, or reverse correlation between the VIX index and the futures. The futures are trying to figure out where the VIX index is going to be 30 days out. So there should be some correlation between the futures and the VIX, although the way to think about it is this way, Ron. The futures should be like the VIX. They should correlate with the VIX. However, the futures are slowly decaying over time. So whereas the VIX is going to go up and down like that, the futures are going to go up and down, but they're decaying lower. So if I were to take this VIX chart here, if I were to overlay a chart of VXX to be a proxy for the VIX futures. Let's do that right now. So if I overlay a chart of VXX as a proxy for the VIX futures, you can see a pretty interesting correlation with the VIX, although you'll see the decay happening in VXX. So let's do that. And that's pretty extreme there. You can definitely see, well, let me get out of the way. You can see the massive decay there. But if we look at this just over the period of 180 days, you'll see, there's some correlation here. VXX based on the VIX futures. You can see as the VIX goes up, the purple is VXX. So as the VIX goes up, the futures go up, but they're kind of decaying over time. So there you can see there's definitely a correlation between VXX and the VIX. So there's definitely a correlation there. And Edward, nice to see you. The volatility index, the VIX. That's a good question. What should we call it? The jury's still out. If you want to be a cool trader, you can call it the VIX cash. That's a cool way to say it. The VIX cash, the VIX spot price. Those are like what pro traders might call the VIX. The VIX cash or the VIX spot price. If you want to be super nerdy, you could call it the SIBO Volatility Index. Scott, I'm a big fan of shorting the TVIX. Hey, leave him alone, Edward. TVIX is a great thing to short, and I'll tell you why. No, it doesn't have options, but TVIX has something special going for it that all these other products don't have going for it, which I wish UVXY had going for it, but it doesn't have going for it anywhere anymore. And that is that TVIX has 2 times leverage going for it. And this isn't only good for when the VIX moves lower, it moves 2 times lower, but it's more importantly good because of the fact that the more leverage you have in a fund, the more beta drift it is going to incur. So you get decay from rebalancing on a 2 times leverage product that is way more decay from rebalancing than on a 1.5 times leverage product, which is what UVXY is. So I'm not a huge fan of shorting. Shorting TVIX has its own problems in that you're shorting a stock versus using options. The problem with shorting a stock versus using options is if TVIX goes to 100, you're going to have to eat each dollar all the way up to 100. And if you have enough money in your account, it's no big deal because we know it's going back down again. But heaven forbid you get the tap on the shoulder, that you get a spike, TVIX goes to 200 and you get a tap on your shoulder, hey dude, you need to put more money in your account. Or even worse, TVIX spikes to 200 and your account, your clearing firm or your brokerage just goes ahead and covers your position. They say, well, I couldn't reach him on the phone, so I just bought TVIX. You sold TVIX at 65, and your brokerage, there's a spike, and your brokerage says, well, I'm just going to cover his position, and they buy in your short, paying $200 for it. And then they say, oh, by the way, you owe us $100,000 or something. That's the risk. The risk with actually just shorting these products is a huge event happens and somehow you're forced to cover at the high price. Now, with, Edward is the point I'm sure Edward's making when he says, well, look, there's no options in TVIX, it's a stupid thing to short. The point he's making is with options, I could go ahead and I could buy, if TVIX had options, I could go ahead and I could buy 100 call for each 100 shares I'm short, and then I know that no matter what happens, my pain stops after 100 because I have that call to protect me to the upside. But if you're just shorting shares of something, if it goes to 100 or, if it goes to 200, 300, and you don't have enough money in your account, they could cover your account or force you to cover it, and you could lose a bunch of money. And without options, there's no protection. Now, what you could do with TVIX, of course, is you could go and buy UVXY options against it. Why not? And thus, if if the thing spikes to 1 million, you've got those UVXY calls to offset that in your position. And now, I would quickly get on the phone with your brokerage account if there's a huge spike and say, hey, before you do anything, I'm here. My account has plenty of money in it because I have these UVXY calls. But TVIX is a great thing. If you manage your risk properly, it's a great thing to short because the extra decay that you get from the fact that it's rebalancing every day is going to add to your returns. That's why TVIX split before all these other ones did. That's why TVIX has had better returns than all these other ones. It's not just because it's 2 times leverage, because 2 times leverage, that happens when it goes up and when it goes down. The thing that's making it decay so much is the beta drift decay based on the 2 times leverage is way more decay than UVXY gets from rebalancing 1.5 times. It doesn't sound that much of a difference, 1.5 times versus 2 times, but it's a huge difference in decay. That's why TVIX has been such a great winner. So there you go. Is TVIX more expensive to borrow shares than VXX? I don't know the answer to that question, Hubris. I haven't checked it out. I would suspect that TVIX costs more to borrow than VXX, but I don't know the answer to that. I can do a little research and leave a comment on this video about that. But yeah, I think definitely if you're sizing properly, there's nothing wrong with shorting TVIX, especially in the middle of a spike. But I just want to say thank you to Edward for all your support. When I was in purgatory in that 90 days without being able to post here, Edward reached out to me a couple times, and that was great. So thank you so much for your support. Yeah, it's really unfortunate that they nerfed UVXY. It was also doubly unfortunate for me because I owned put spreads at the time, and the volatility got just crushed. Obviously, if you change the leverage on something, it's going to make it less likely that it moves farther out of the money. So, and as far as shorting stuff right after reverse splits, I'm a firm believer in the fact that a reverse split is not going to change how quickly something goes lower or higher. I think sometimes when when you have a reverse split in a stock, if it's highly or when you have a regular split in a stock, if it's highly publicized, it can add that extra publicity can make people go out and buy that stock, and thus sometimes when there's a regular stock split, it can make the stock move higher faster. And there's certainly a possibility that in TVIX it's publicized that it did reverse split, and thus more people jump on to short it. But mathematically, there should be no reason why it would move lower right after a split than not. Will SIBO add more strikes to the February UVXY options chain? Now, this is a question that I got yesterday from somebody too. What he's referring to there is that there are no half strikes in the February UVXY options chain. And maybe they're thinking it's going to split before then. Maybe they have some secret knowledge that it's going to split before then. I don't know. For me, when I was a market maker, I liked there to be less strikes all the time, because the less strikes there were, the more money I could make with because people would be forced to go to the other strikes, and we could keep the markets wider. But I don't know the answer with the February strikes thing. You know what? If you go bug the SIBO, go out on Twitter and start bugging them. I go out on Twitter and start trashing them about how the markets are too wide and stuff sometimes, to see if I can get them to tighten stuff up. It doesn't really work though usually. But yeah, go out and bug them. I would think that dollar wide increments should be wide enough for you to still trade this stuff. But yeah, these markets are ridiculous in February in UVXY right now. I'm just looking at the ones behind me. The 10 puts are 20% bid at 75. Come on. The 12 puts, 51-cent bid at 294. So you're giving me a $2.50 wide market on a dollar option? Come on, guys. Well, I'm looking at the strikes right now in February in UVXY, and it's showing, I guess maybe they fixed them today, maybe. But somebody was saying they were $5 wide yesterday. But I'm showing now that they're dollar wide, so it looks like I think they just added them today, actually. It looks like they just added them today because there's no open interest. They're $5 wide, and there's open interest only on the ones that are here. I'll show this to you here. The open interest is only on the ones that are $5 wide. So I think they might have just added it today, added the strikes today. That happens sometimes. I think maybe the February just came on recently. It's weird. It looks like somebody just bought one of each option in something, and maybe they did that to like make their software work right or something. But isn't that weird? There's open interest of one in all these strikes. I think that has something to do with someone's software requires that they have one contract or something. But yeah, it looks like they fixed that. TVIX split. Yuri, TVIX split a couple weeks ago. It split. Let's see, we can figure it out, right? It split on December 1st. Yeah. All right, so yeah, so expiration tomorrow. We'll monitor it, but it doesn't really matter. You should be looking at just Jan. The Jan future right now is the one that's driving the ship here. VX F20. I have it on my screen here as /VX F20. Right now, trading 1490. That's driving the ship. Now, 1490 compared with the spot price in the VIX, it's significantly higher. Remember, on expiration, usually we were seeing somewhere around $2 between spot and the future. This is sizing up to be almost $3 between the VIX spot price. Well, yeah, almost $3 between. It's like 282 or something between the VIX and the what's going to be the front month future. Now that's pretty wide. Almost $3 between the VIX and the Jan future is pretty wide. So there is potential for those to converge with each other. So what that means to me, if we've got almost $3 between the VIX and the Jan future, what that means to me is either we're going to get a pop in the VIX or these products are going to move lower in the next couple weeks. And you already knew that. That's what this big contango number and all this stuff says. Something's got to give either. And I know these products have moved down a lot, but if the VIX doesn't pop in the next couple weeks, these things are going to move down even more. But there's a good chance that we're going to get some sort of pop in the next couple weeks. That's a wide area of almost $3 between VIX and the January future right now. Yeah, so UVXY expected to reverse split. Usually what happens, Ron, is once they get to like 8, once it gets below 10 for sure, but once they get to like 8, they're probably going to reverse split. If we do go to the Six Figures website, he's updated. People make these calculations as to when statistically these things will split. So if we go to Six Figures website, I know he recently updated his estimate for when UVXY is going to split again. No, the VIX is not broken. What caused the volatility tsunami? Let's see if I can find this here. About search UVXY split. I think they're estimating it should be like March or something like that, I think. Here we go. He's got it estimated as May 11th. So this is what Vance says. I'm estimating the pro shares will reverse split UVXY 5-for-1 for the 10th time around May 11th. I'm basing this forecast on UVXY's recent decay rate of around 11% per month. And he's saying the same thing I was. It's about when it gets to about $8 per share is when they announce it usually. And whoever said that is right. These will reverse split forever, and that's how they can decay and never get to zero, is because they just keep reverse splitting. And that's how, like, when you look at a chart from like 10 years ago, you see if, adjusted for all the splits, these things are worth like $200 million or whatever. If you had, invested, $1,000, now it's worth like 1 penny or something. But here's a list here of all the reverse splits we've had since 2011 when UVXY started. It started trading around $40, and we've had all these reverse splits. The last one was in September of 2018, but we had 2 in 2018, 2 in 2017, and then that was when this was a 2 times leveraged product. But now there's 1.5 times. Look, we haven't had one for the whole year of 2019. So there you go. And you can see here the prices that they had it split before. $8, $6, $7. This one's $15. It looks like it probably rallied probably like they announced a split and then vol spiked and they're like, oh, maybe we shouldn't have split it. But those are the other splits for UVXY. So it's coming up. So what does that mean? What does that mean if a split's coming up in these products? It means that if you're trading options in this stuff, be aware that the split's coming up. And once they announce the split, get out of whatever options you were in the old strikes and replace them with the new ones. Because once the new ones are listed, nobody's going to trade the old ones. So it's not a super danger if you're trading like Jan way out stuff. But if you're trading way out stuff anyways, the markets are not going to be any good. I was looking in VXX at like this next year out June, which I'm not even sure where they listed this already, but next year out June, which I actually have a position, or no, I don't have a position in that. 549 days till expiration, and the markets are actually tighter than in UVXY. Go figure. But the stuff is it's pretty wide. No open interest. If you want to look at my positions, it's right there, but I'm not going to talk about it because I'm being superstitious and I have a pretty big short on right now. So no, that's all I have to say about my positions right now. Anyway, thanks for watching. I am putting together a holiday show coming up. Ron, you will officially know about the split because I will announce it and be talking about it and tweeting about it. But you can watch the ProShares website. They will release a press release. But follow us on Twitter, and we will. I will release it. I think I beat out a lot of people. I saw it on some forum I was watching, and I was one of the first people to break the news on the TVIX one. But I try to be the first. I try to be the first one of the volatility people to put it out there when they actually announce a split. It's like a personal thing I try to do is get to be the first person. That way, I'm quoted by other people. Yeah, UVXY spreads are awful. The spreads are really wide. I have no position in UVXY right now. I've switched all my stuff to VXX for now. And I miss the action in a way, but I don't miss just the stuff being marked all crazy and against and all that kind of stuff. Yeah, so there will be a holiday show. I've got some special guests who's coming on for the holiday show, which I'm probably going to broadcast on Christmas Day. So have some fun with that. Thank you, Ron, for watching, and thank you everybody else for watching. And we'll leave it there. Leave your other questions and comments for me. I need to get some hair gel or something because my hair is out of control. I got to go practice for my guitar lesson today. But thanks for watching, and I will see you next time. Thanks so much for all your support, fellas. Ladies and fellas. See you soon. Bye-bye now.